Should be recording now, alright, but so basically, I think your major issue was just the time frames, right? The structure and time frames. So like, I'm gonna try to go over a couple pairs and just walk you down through everything. So let's go over like a random pair I don't even trade, like CAD THF, right? Like I don't trade this pair. It's hella random, shit. Well, yeah, but alright, let me delete everything. Damn, I remember I had this marked up and it actually played out too. That's crazy. But yeah, alright, boom. Alright, boom, boom, boom. Alright, let's go. So, you can see CAD CHF is in a downtrend from a macro perspective. So, the macro is basically just a zoomed out version. You're just mapping out what the overall, like, couple of years have been. Like, I'll give you an example. If you're into, like, football, right? You'll be like, okay, Real Madrid has been winning a lot in the past. When you're looking at a macro perspective, you're looking in the past, like, years and years behind, right? But when you're looking at a current perspective of the charts, current perspective, that's more like recent, more like this type of stuff right here. So I can see sometimes you might be like, oh shit, but the trend is still moving bullish. Like, now we have a break of structure. Does that mean I sell? Does it mean I buy because there's an order block right here? What do I do? So I understand why you're confused. Trust me, I understand why you're confused on it. And honestly, I'd be confused at this point too. But try to, like, we're trying to get a better understanding of the higher time frames rather than this little smaller structure right here. We're focusing on this. So long term, we've just been seeing major drops, major retracements, major drops, major retracements, and then major drops, right? So let's map out the lower highs and lower lows. So we have a lower high right here, you have a lower low, and then you have a lower high right here, and then your lower low. Now, like I said, price is going to be attracted to those major moves, right? Those major moves price is going to come to. Now we can see that from a macro perspective, price has just been going bearish, completely bearish. Now looking at this area right here where price created that lower high, this swing lower high, you saw that it created an order block, came back, tested it, and then sold off. So basically our job is just to look for another new order block, but that caused that major move down, breaking structure towards the left. So I'll show you what I mean. Right here we have this low, right? As soon as the price sold off right here, we broke this low, we made a new low, we printed a new low. The fact that we broke this low and made a new low confirms that longer term we're still bearish. Longer terms we're coming back down at this area to make a new low. Now, like I said, whenever you see a continuation of structure or break of structure, you want to focus on the what do you call it? You want to focus on that major move down. So for example, this is that major move down, right? Because this is that last area where price consolidated and then it finally pushed down and broke out. Now that's why price ended up coming back and testing this institutional candle right here, and now it's sold off, right? Now I get what you're saying. Now you're gonna be thinking, okay, but what do I do, right? Because on the daily time frame, there's still this order block and price is moving bullish. But remember, because we did tap into a weekly zone, that means that the longer term thing that's going to happen is price is going to go down. So it might go up a little bit, but overall we're expecting price to follow this weekly, lower low, lower high, trend direction, whatever you want to call it. So we're expecting price to go down. That's what we're basically doing. We're expecting price to go down. Now, let's look at the daily time frame. On the daily, you'll see that we have this, high, higher low, high, higher low, higher high. Now notice how we broke structure right here. Right here we broke structure. It's not the cleanest, but it's pretty obvious. We have that clean break of structure towards the downside, indicating that structure is now moving bearish. Now this is after price tapped into an institutional candle. This is after the fact. So this is after, because if price didn't tap into this institutional weekly candle, then this stuff wouldn't be interesting to me. Like for example, right here, we see multiple breaks of structures here, but it's not valid because it's not in a higher time frame point of interest. This happened all inside the higher time frame point of interest, right? So boom. At that point, the market basically just consolidated within this area, but then we broke past this low. So remember what I said about basic market structure. In order for it to be considered as a higher low, it needs to make a higher high, and in order for a lower low to be considered a lower low, it needs to make a lower high. So for example, you see price creates a high, and then you see this. Is this your higher low? Nah, because it didn't make a new higher high, right? So until price breaks above and makes a new higher high, we're we're basically considered to be in a trading range from this high up to this high, or down to this low. So this is your trading range. Now, what's the difference? What's the difference right here? We created this high, we created this low, but we didn't make a new high. So that basically tells you that the bullish, trend direction is slowly dying off. It's slowly, getting weaker, and it is dying off. So now we broke this low right here and printed a new low. So I guess you could call this, break of structure, whatever you want to call it. But price ended up reacting off of this institutional candle right over here. Now, honestly, this would have been a pretty clean, scalp buy opportunity if you were looking at this, but whatever. We're looking at a higher time frame type of analysis. We're looking for a longer swing type of trade. So after price came into this area, broke structure right here, consolidated, did its thing, and then broke structure once again right here. I'm focusing on that major move down. This is that last major move down after price consolidated right here. All right. So boom, price consolidates, comes into this point, and then goes down, significantly, and sells off. So at this point, all I would do is I would basically just wait for price to come back within this area, and I'd look for an institutional candle that was responsible for that break of structure. So for example, right here, right, we see a pretty clean bullish candle before that major move down. I think if you go down to maybe to the 12 hour, you'll find something. Yeah, there we go. So the 12 hour, you can refine it up to right here. And that's basically what we're waiting for now. We're literally just waiting for price to come back into this area. And then this is where we'd sell. That's it. So notice I'm not on the 15-minute, 5-minute looking like a clown saying, yeah, guys, you gotta use the Fibonacci. You guys gotta use the Fibonacci. Like, nah, that shit does not work. Like, I hate when people... I honestly, this happened to me as well, but the idea of everyone saying you need to be on the 5 minute for entries, 5 minutes for entries. I literally just found an entry on the 12-hour time frame, and the risk to reward is insane. That's a 21 pip stop loss for a potential, we're targeting down here, so that'd be like a 852 pip take profit. So just let that sink in. You know what I'm saying? But yeah, we basically, and the way I found this IC was, it was at the top of this major move down that broke structure, that printed a new low, and we can see that structure was shifting after price tapped into our institutional candle. Before it tapped in, you can see we were printing new highs. Every time we were printing newer highs, but the second we came into the IC, we printed newer lows. Right? And notice how the lows are getting smaller and smaller and smaller. So it's not really about your skill. It's more about just seeing it. You just have to look at things from a logical perspective and just like look at it, just see it and understand it, right? So that's an example on CAD CHF. I don't even trade this pair, right? So if this ends up playing out, I'm a legend. I don't care. But let's go to like Euro CAD. I kind of trade this here and there. Oh, this is annoying. Stop me out and then I went away. But sure, let me delete this. Let's do a brand new analysis. Now Euro CAD on the daily time frame. See, this pair is so hard to like just understand because like it's just weird. But overall, you can see that the overall trend is moving bullish. One retail thing people do is like they buy the trend line, I guess. But what you could do is just use the trend line as a understanding of where price has been overall going. So you can see the order flow is still moving towards the upside. Make sure. Alright, cool. My voice is still recording. You can see that basically price is still moving towards the upside, indicating that institution, hedge funds, smart money is still interested in buying. Now, I'm not going to be looking at this buy position over here or this buy position over here, because just look at Euro CAD. It has been when it makes deep pullbacks, it doesn't make like deep pullbacks all the way down to the next low. It basically makes a deep pullback, goes up, deep pullback, goes up, right? So looking at Euro CAD just currently, right now, just looking at it like currently, we can see that there is liquidity resting over here. Now, it's not the cleanest, but there's definitely some type of liquidity resting over here. Now, I'm not going to be looking to sell right here. I could look for a sell opportunity right here if I wanted, and we'll go over that right now. But I'm not going to do that, right? Because basically, I'm more of a long-term type of guy. I don't think about what's going to happen today, tomorrow. I think about what's going to happen in the next the next year, next 10 years. That's just how my personality is. So instead of me looking at the 8 hour and looking at all this, I look at the left and I try to catch that major move up. Because think about this. This is that last major move up that broke structure right here. and then price ended up coming back into like an institutional candle right here. So what's the difference? There's no difference. This gave us a major move up. It broke structure right here. Broke structure right over here. Breaking structure top, and price is coming back down to this, the open of this major move up, right? So you get what I'm saying. So, and we also have liquidity, which means that price has to come down over here. It has to come down over here. So how would I find the entry? Well, let's look for an institutional candle. That's literally, at this point, all you're really gonna look for is an institutional candle. Now I use every time frame. I don't have a strategy for which time frame, or which one you for sure you always use. It's literally just about looking. You just have to look. So for example, this area right here, before the market swept and took liquidity, or before the market pushed up, we saw that it created a ton of liquidity right here, right? So liquidity cleared, the market created a bunch of equal lows. Now as soon as the market went down and took those equal lows out, this last bearish candle before that move up became way more significant. The reason being is because if an institutional candle is in the form of sweeping liquidity, or it's in the form of clearing IP or something like that, it just becomes stronger. I don't know why, but it just becomes a lot stronger. And that's exactly what we have here. We have this little major manipulation zone that the market created, and then boom, we push down to take those stops out, and then price goes up. So hence that's why this order block right here is going to be extremely significant. So all I would do now is I'd wait for price to come down into this institutional candle, and then you could either enter with a limit right away. That'd be a pretty big ass stop loss, not gonna lie, but you are swinging this. So look at the take profit, which is a 15-1, which is still pretty good, right? And obviously you can also do your thing, wait for the confirmation that everyone waits for, go on the smaller time frame, look for that structural shift, or you could just use that big ass stop loss and still risk 1%. But that's basically just how I do my analysis. I'm not really going on to the 30-15. The only time I would really ever do that is when I'm trying to refine an institutional candle. So let me go down to the 4-hour. Let me go down to the 12-hour actually. 12-hour wise, you can't really refine it. I guess you could say refine it up to here, but like it's not clean, right? The second daily time frame was clean. It was a really nice, big momentumous bearish candle, and then that major move up. Here it's just choppy. I don't really like that, so I wouldn't do much. Going on to like the 8-hour. That's the 9-hour, my bad. Going on to like the 8-hour time frame. I'm not really seeing anything. Now you could refine it up to here, this last institutional candle, before that major move up. So, and you can keep the same stop loss, and you just refined it down to like 77 pips, which is really good considering the risk to reward you're getting out of it. So that's basically how I do my analysis and stuff. Now try to just stick to the higher time frames when it comes to trend. Now when you want to take a scalp or intraday trade, as in like 50, 60, 100 pips for the day and you're out, that's when you might want to start looking at the 8-hour time frame. So for example, or not the 8-hour, but the 4-hour, 1 hour. So for example, on the 4-hour time frame, we saw price was, or the 8-hour price created a low, lower high, lower low, right? And like I always say, price is gonna come towards that last lower high, find an institutional candle at the start of that last lower high that was printed before that major move down. That gave us a continuation of structure right over here, and it's going to use that institutional candle to go down. Now that's exactly what's happening right now. Now we know that it took the liquidity right here, tapped into an institutional candle right here, and now it's going down. What's next? Well, you could either go down to the 4-hour and look for re-entries. So you could look for an entry over here, this institutional candle, or an entry over here. So you can set limits one right here, and just wait it out. Right now, what's interesting is now we can go down to the 1-hour time frame and look for more confluence. We can see that price was creating this uptrend in structure, right? Higher highs, higher lows. But then as soon as we came up to here, market just goes down, breaking structure here, and potentially breaking structure here. So that's basically how it's done. Literally, that's literally it. Like over here, you see that there's a major move down, but there isn't any clean breaks of structures, right? We created this higher low, higher high, came back down into the same higher low, pushed up. Right here, we created a high, higher low, higher high, but we broke out down of it and broke structure. So it makes logical sense on why EuroCAD might come back into this area or this area, because these two are the last institutional candles that cause those breaks of structures. And this is where you can take intraday opportunity down to like, you know, liquidity, which is 328 pips, and that's a pretty good target. That's insane if you can, you know, target like that. So let me go over a couple more examples. Like, I'll go over one more. Let's go over GBP CHF. Such a boring pair, but yeah, let's go over this one. Damn, this one's ugly. I don't even know what's happening over here, to be honest with you. Actually, no, I do. So look, so GBP CHF overall moving down. We're moving down. It's clean and clear. We're moving down. Look at this. Price is moving down. Look at that line. It's 100% moving down. Now we do see this major move up. Well, like I said, it's just to come back up towards that original lower high that created a major move down, that broke structure or continued structure, so it can tap into that institutional candle and go down. So I'll show you what I mean. I'm not trying to go down to like the 12-hour, but I'll do it just because why not? But like, yeah, right here, we see a last bullish institutional candle before that major move down. Price basically had a objective. The objective of this major move up was to come back up into here, right? And that's what happened. So price came up to this point. As soon as we came up to this high, we see a major move down. Now let's look at structure. Structure on the daily. High, higher low, high, higher low, high. So we broke structure. That's pretty clear. We broke structure right here. Break the structure down. My bad. Yeah, boom, break the structure down. So that indicates that after price tapped into the zone and it broke structure, it basically tells us that our zone was extremely strong. Now we even broke structure over here. We created this last higher low, price broke below it, right? Now what's left though? Liquidity right over here. We have a ton of liquidity, right? So that means that GBP CHF most likely will have another run towards the upside to take out all those highs, and then it might go down. So our main job is just to find the institutional candle that was, you know, printed inside of this high right here that caused that major move down. So maybe I'll go down to the 12-hour and boom, there we go, I found it. It's that simple, bro. From here, that's your IC that you set limits on, or maybe you wait for confirmation. And if this is a little bit too big for you, you can go down to the 8-hour, refine it even more. I think the 12-hour is good. We'll check the second daily time frame just to make sure. Yeah, you can even take it from the second daily time frame if you want to be a little bit more secure or safe. That'd be a pretty big zone, but you get my point, right? You get my point of what I'm trying to say. So we broke structure, and at this point, all that's left is price to come up and then sell off. That's basically, and our targets would literally just be the next level where there's liquidity. So we have a ton of liquidity resting right here. Liquidity cleared. And then we have, obviously, we want to see this low get broken, because look at the past. Just look at the past. After price created this major move up, right? It came back into this last, lower high, or before that last major move down. And then after it came in here, it sold all the way back down, breaking this low, making a new low. As soon as we made a new low, price pushed back up to do what? To tap into a new institutional candle that caused that major move down, breaking structure towards the left. Price taps in, right? As soon as price taps in there, it breaks structure once again, makes a new low. Then the market goes up. Oh, my bad. As soon as price tapped in red over here, let me mark up this IC. So we're looking at this IC right here, this last one right here. Price pushes up into it, sells off. We printed a new low right here, right? So once again, look for your institutional candle. We found it. Price pushes in. What's happening? Same exact thing. We're just waiting for price action to come back up into here, and so we can sell all the way back down. It's just like a pattern at this point, Now, the odds of price, maybe taking liquidity, it might not be that high because it hasn't really done that in the past before, right? So what I would say is you can go down to the 4-hour and focus on that major move down, like right here. This is technically a major move down because we broke out of this area right here, sweeping liquidity. So what you could do is, let's go down to like the 12-hour, see if I can find anything. 8-hour. Honestly, I don't see anything here, but if there was an institutional candle here that was untested, I would take it, right? But I don't see anything over here. All I really see is just liquidity resting high, at the highs. So actually, I do see something, my bad. So right here, I see an institutional candle. It is untested in my opinion. This is not tested. I know it went away from it and then came back in, but to me, a mitigation basically has to move away from it completely like this and then come back into it. So you could focus on selling right here, right? Let's go down to like the 6-hour. Let's see if there's any other IC candles. And then one more, we see another IC candle right here. So now we have 2 levels we can potentially sell at. And you know, technically you could say that this liquidity over here towards the left already got grabbed by this move up. So technically you could say, okay, these are my levels of interest, and I'm going to be selling over here and over here to catch, you know, this major move down all the way down here. So really it's all about just finding that major move down that broke structure, continued structure, and then looking for the institutional candles that are untested, right? And obviously they're going to be premium because it's a sell. So let me take my fib out. Running from this high down to this low, and you can see that this one right here, it isn't in the blue zone, but it's just underneath it. So if it is just underneath it, it's still valid in my opinion. Yeah, and the other one which we're focusing on is in the blue zone, so which is a good sign. So that's basically how I do my analysis and how I tend to not get confused with, you know, basic stuff like structure and all that. But remember, what I do doesn't mean you have to do the same thing. You gotta have your own style of everything, right? So have your own style. You don't have to use the 12-hour, 1 hour. Sometimes if you feel like just going scalping, then just scalp it. And if you don't, don't. Right? Stick to the higher time frames if you want to. But yeah, I hope that video was helpful. And yeah, let me know if you need any more help. Peace.